This is going to be a very short stock analysis update for IGas. This has been my worst trade since I started the channel about 3 years ago. Luckily, it was only with a very small percentage of my overall portfolio, so the damage hasn't been too bad. Liz Truss had just got into office and she was very pro-fracking. It looked like she had strong party backing for her ambitious policies. But unfortunately, the mini budget led to a collapse of the pound sterling. Now, I think actually that was more to do with the government indebtedness due to COVID and all their quantitative easing, plus the extra strain caused by the Russian invasion of Ukraine. I think that the actual mini budget was the straw that broke the camel's back, rather than it being a bad idea in its own right. But all the same, we had a collapse of sterling, and then as a result of all the chaos from there, Liz Truss is now out of office. And I think that the main reason for the crash in share price has been the ever spiraling out of control political instability, which has made it extremely unlikely that a government is going to have the balls to get a fracking bill through Parliament and then get us in a situation where fracking can go ahead without local councils spoiling it with their planning permission, without local councils being able to use planning permission as a weapon to stop it from happening. So like I say, for me it's not even 1% of my overall portfolio. So I'm just happy to sit and watch what happens. I'm not ready to just sell all though, because when you actually look at the composition of IGas, and go and look at my previous video for more detail on that, but in August the market cap was 88 million and now I have it at around 44 million. So actually IGas is now trading at a price to book of 0.5 and a price to earnings of perhaps between 3 to 6. Now this is based on my calculations. Go and look at my last video. I'm an amateur, so all these numbers could be wrong, but if I am right, the actual valuation for IGas is looking fairly attractive now, assuming that we still get high oil prices. Bear in mind that IGas are generating revenue because most of them, the majority of what IGas are, is onshore oil fields all around the UK, pumping oil, and they are breaking even from that as far as I can make out. So they do stand alone as a company, even without the shale gas. And when I looked at their assets, perhaps only 6% of their assets are related to shale. Most of their assets that I could interpret from their annual report are actually their oil and gas assets that they have where they're producing oil from and the expected future revenues from those. So you can see that their market cap now does start to look quite attractive. So like I say, the amount I have it kind of doesn't really matter anyway. But it's not like they were totally a one-trick pony, and so I'm gonna be quite happy to just sit back and see what happens from here. At the end of the day, they are now trading well below their price to book, and those assets don't really include that much shale anyway. So this concludes my short and stock analysis update for IGas. Please remember that I just do these videos for fun as a hobby, so go and speak to your investment advisor who definitely would have told you not to invest into IGas. So have a nice weekend and good luck with whatever you're doing. Please read the disclaimer and remember that prices can go down as well as up.